Hey everybody, Kevin here. I am the owner of multi 6 and 7 figure firms in Canada. And I want to talk to you today about job security. And the reason I want to talk to you about job security is I get that a lot with my colleagues and other CPAs who I speak with who are currently working on a T4, our employment income. And whenever I talk to them about, the benefits of getting out on your own, starting your own firm, what's in it for you and that sort of thing, their argument always comes back to, I've got job security where I am right now. I've been with the company for 3 years or 5 years and worked my way up. What I'm making right now, it's taken me 4 or 5 years to get here. I'm probably one of the last of the few who would ever be cut if there was ever a downturn in the market. I hear that a lot. And what I usually say to them is, okay, what if I were to tell you that there is an opportunity out there to get into a business that is recession-proof, guaranteed income. It'll provide you with guaranteed income. Your earnings will increase by 3 to 6 times what you're currently earning. Doesn't cost you a dime to get into it. And the best part is when you get into it, if it turns out it really isn't for you, you can get out with all of your money and probably a bit more in a 1 to 2 week period. Whenever I give that little, I don't want to call it a presentation, but whenever I give that little spiel, it always seems to pique their interest. And the reason that I can give that spiel with some credibility is I was in their shoes 18 plus years ago. I was working at a job, I was working in industry, and I knew I didn't want to work for someone else for the rest of my life. I knew I wanted to get into my own business. But I always came back to that argument, but I've got job security where I'm at. I'm receiving, I think at the time I was making about $125,000 a year and probably not going too much higher at that point. But you would always come back to, I've got job security. Do I really want to give up that job security? And when I finally did break out on my own and start my own firm, I look back on that now and I think, job security, what kind of job security did I have? Because the reality is, when push comes to shove, and what I mean by that is that when the market turns and your employer has to save costs, trust me, all you are is a number on their budget. And that number is an expense. And when they have to cut because the income is not coming in the way it used to come in, they don't even think twice about cutting you. That's the kind of job security you have. And actually, I'll take it one step further. When I think of job security, or I think of a turn in the market, I think to myself, okay, so at one point in my career, I was willing to put the future, my family's future, in the hands of the owner of the business who I was working for. And I look at that today and I think, oh my God, that was like, what a crazy way of thinking. I can tell you right now, if the ship is going to go down, I want to be the captain of the ship. I don't want to put my hands in somebody else's, or put my fate in somebody else's hands and hope to God they're going to make the right decisions. Because again, when things go south, I assure you, no matter what kind of job you're doing, no matter what kind of employee you might be, no matter how your friendship might be with your boss or whatever the case may be, when it comes down to survival, you'll be cut. No ifs, ands, or buts about it. If that is the last, if the last person standing If there's only one person that's going to be standing, it will not be you. It will be the owner, and then the owner will probably go down with the ship. So that's what I have to say about job security. Now, getting back to how you can be in charge of your own destiny. When you get into running your own firm, all those factors that you thought you had when you worked for somebody else, you have those when you start your own firm. You've got a recession-proof company working in a recession-proof industry. I know that because I went through 2 market downturns, and in both cases, my numbers went up in that year. In fact, I'll let you in on a little secret. When times get tough and the government needs money, the government will start to look at non-filers, and they'll go after those non-filers, and they'll send them letters, they will phone them up, they will hassle them to make their filings. And that's when they call us. And when they bring their files to us to complete, Revenue Canada has a sense of relief because they know that, okay, at least now the taxpayer is getting their returns done. The taxpayer has a relief because at least now they've stopped the pain point of CRA calling them or the IRS calling them, and now they're going to get their returns actually done. And at the end of the day, by the time it gets to that point, your client's going to find the money to pay you to get the returns done. And it's funny. I mean, another thing that I've learned in this industry is people will tell you that they don't have the money for this, they don't have the money for that. Well, I can assure you, everybody has access to cash when push comes to shove. And when the government is phoning them and the government's hassling them, which normally happens when you've got a downturn in the economy, people will find the money to get their returns done. So there's that. And it's actually funny. I remember I was at a Pro D session probably about 18 plus years ago. And I remember the facilitator saying, somebody had asked about taxes as a partnership and how the taxes are higher than if you had a company. Excuse me. And I remember the facilitator saying, well, you know what us accountants are like. We always spend every dime that we make because we know we're going to make the same or more next year. And it's funny because I come from a very entrepreneurial family that was never in the accounting business. And I can tell you, whatever business you're in, whether it's retail, whether it's construction, whether it's flipping houses, whatever, you always have a sense of saving your pennies for a rainy day, because you never ever know when the market is going to turn. And when the market turns, well, you better be ready for that turn, and you better have some cash reserves, otherwise you're going to go belly up. And I still, to this day, remember that facilitator saying what she said. And of course, she had been in the industry for 30 plus years, so she knew what she was talking about. And it's funny because I had a complete different take on things after she had said that. And to this day, I've proven her statement every single year, because every single year, I don't care what the economy is like, my numbers go up every single year. I could actually spend everything I make in one year. I could spend it all because I know darn well I'm going to make it all again in the following year. In fact, it's funny, I actually did a present value calculation just to see the amount that I can spend every year. What is that equivalent to having in the bank? Because I know for a fact, 5 years from now, for example, let's take my Ferrari allocations. I know for a fact that I can commit to purchasing a Ferrari 3 years from now for $700,000, and I can sign on the dotted line and I can put my deposit down because I know full well I will be able to make that purchase 3 years from now. And the reason I know that is because the industry that I work in is guaranteed to go up, or I was going to say or stay the same, but that's not even true. It goes up every single year, and it has for the last 18 plus years. So I wanted to do a quick calculation just to see, okay, the annual cash flow that I can spend without even thinking twice, what is that equivalent to having in my bank? And the reason I was interested in that is because I have clients who are in the construction industry, and they make big money. And their net worth is probably, some of my clients is upwards of about 25 to 45 million dollars. But the reality is they need to keep taking their cash flow and investing it back into the company. And the reason why is because as soon as they stop doing that, the cash flow runs dry. So really, although their business is doing really well and their net worth is quite high, they don't really get to cash in on that net worth until they're done working. Then they can cash it in, and then they've got their money and they can do what they want with it. But until that point, they have to consistently keep feeding the machine in order to generate the revenue, or in order to have the ability to generate the same revenue or similar revenue in the next year. Us CPAs, we're a little bit different in that our investment is everything that we put up here. We've spent tens of thousands, probably more like hundreds of thousands of dollars getting the knowledge up here. And this is our capital right up here. That's where we made our investment. And what that has allowed us to do, if you get into your own business, is you can generate your own income year after year after year, and you can spend every dime that you make this year. You can spend it all because you know damn well you're going to make the same amount or more next year. So getting back to my calculation that I did, based on my annual income, I wanted an idea of what is that equivalent to in terms of money in the bank. And what I came out to, using very conservative numbers, is the amount of cash that I can spend on an annual basis is equivalent to having about $32 to $37 million in the bank. Meaning, if I were to never make another dollar for the next 25 years, that would be like me sitting here and having $32 to $37 million in the bank, and all I do is I live off that $32 to $37 million every single year for the next 20 or 25 years. That's the equivalency of that. And I can tell you, it's a really nice feeling to know that I don't have to worry about what is the market going to look like next year. I already know, and I've proved it for the last 18 plus years, year after year after year. I already know that the market in our industry, if you own your own firm, is nothing but good. And I know that because I've been through 2 recessions so far, and like I say, each recession I made more money than I did in the previous year. I am in charge of my own destiny, meaning I can put the safety mechanisms in place if there is going to be a downturn in the market, or I feel I need to make X amount of dollars to make everything work on the personal side. I'm the one who's in charge of that destiny. I'm not leaving it up to somebody else. And really, worst case scenario, as a trained CPA, if I had to, let's just say I had to release every single one of my staff and I had to run the show myself, well, I know that I can do that. I know the tax, I know I can do tax returns, I can do corporate returns, I know that I can do all that stuff. So the reality is, if I had my own firm and things just went drastically wrong, which they're not going to, but let's just say they did, and I was reduced to a one-man show or a one-person show, I know for a fact that I can still generate $125,000, $200,000 on my own. So there's some comfort in knowing that. And The other part to this whole thing, as I mentioned at the beginning of this video, is that the beauty of these firms is that if I get into it, let's say I'm working at a Big Four firm, or I'm working in industry, and I think I want to try my hand at public practice. I buy the firm, I get into it, and after 1 year, I totally can't stand it. The beauty of these firms is I can be out in as little as 1 to 2 weeks. I know for a fact that if I put that firm on the market, I'll have offers within 3 days. I will take another 3, 4, 5 days to review the offers and pick whoever I want to shortlist, and then we go from there. The industry today for public practice firms is very, very strong. I'll give you one more quick example just to wrap this video up, because I see I'm getting up there in the time on this video. I bought a firm about a year ago for $465,000. This year I'm on track to net $225,000. And I think I've said this before in my other videos, I work about 9 hours a week in this firm. Now, rule of thumb, I can sell a firm for about 3 to 6 times net income. So if I'm netting 225 grand, I know that I can sell this firm on the low end 3 times that. So I can sell that firm for $675,000. I bought it for $465,000. That means that if I really decided I want out, not only do I get my $465,000 back that I bought it for, but I will also get a premium of another 210 grand in selling. Plus, for the year that I owned it, I walked away with 225,000 net income. So 225 plus my 210 is $435,000. So what I did is I gave up 1 year worth of T4 income that I was probably being paid anywhere between 80 to 90, let's say as high as 125 or even 150. And in that 1 year, I managed to walk away with $435,000. And the cherry on top of this whole thing is that if I really, really, really want to go back and earn my income on a T4 working for one of the big Four accounting firms, or even a smaller firm, or even industry, I know that I can land a job in probably less than 2 weeks because of my experience and because of my qualifications. So the whole point in this whole thing is that there is zero downside and zero risk. I can get into the firm without using a dime of my own money. I can generate decent cash for that 1 year period. And as I said, if it turns out it's just not for me, and it won't be for everybody, but it turns out it's not for me, well, I can get out and I can walk away with a little suitcase full of cash at the same time and pick up a job in the next, say, 2 weeks. It's nothing but a win-win-win situation all the way around. Anyway, if anything that I said in this video interests you, feel free to hit me up. My information is down below in this video. So you can DM me. Type in the word free if you're going to DM me, and then what I'll do is I'll get back to you, and we can get into a further discussion of how maybe something that what I'm talking about here might apply to you. Okay? Thanks everybody, and again, my name is Kevin, and I am the owner of multi 6 and 7 firms here in Canada. And everything I'm talking about, just on a side note, doesn't just apply to Canada. It also applies to the US, okay? So if there's any of our US friends out there, feel free to hit me up. All right, guys, we'll talk to you later. Bye for now.